This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Look at example 117. Example 1, Sergius acquires an asset on the 1st of January, had a fair value of 17.5, and he bought it on a lease, the terms of which are that he pays a deposit of 460, followed by 7 annual installments of 3.5. Payable in arrears. That means if you sign a lease on the 1st of January, then payable in arrears means your installments will be at the end of each year, 31st December each year. And required to calculate the interest charge for each year using the actuarial method. The interest rate implicit in the lease is 10%. Okay. If you lend me money, 17,500. If you lend me money and I immediately pay you a deposit of 460, how much interest is included in that 460? 0. You just lent me the money and I've immediately given you some back. So there's no interest included in the deposit. It's only, interest is a compensation to the lender for the fact that he's been deprived of money for a period of time. Well, if I immediately give you 460 back, then you've not been deprived of that money for any period of time. So no interest is included in the deposit, but interest is included in each of the installments. How much interest is there on this lease? What's the total amount of interest on the lease? No, it's not 10% of 17.5. Okay, what's the total of the minimum lease payments? What's the total of the minimum lease payments? No, it's not 24,500. Say again? Plus the deposit. Yeah, plus the deposit. It's 24,500 plus the deposit. That's what we are contractually obliged to pay. 460 and then 7 lots of 3,005. 7 lots of 3,005 is 24,500 plus 460. So 24,960 is the value of the minimum lease payments. The fair value of the asset is 17.5. Interest in total is 7,460. Okay, we signed the lease. We signed the lease. What's your first entry? This is not asked for in the question. What's your first entry? What's your first recording of the fact that we signed this lease? What's your double entry to record the fact that we signed the lease? Have we created an obligation? Legal or constructive? Legal. Arising from some past event? Yes, the signing of the lease. Will it involve the outflow of economic resource? Certainly will. Yeah. Capable of reliable measurement? Yes. Therefore, we need to record the obligation. The obligation exists. So the double entry, quite clearly, is going to involve debit something and then credit obligations under finance lease account. Where's the debit? In where, sorry? Tangible non-current assets. What figure? 24,960? 24,500? 460? 17,500? Which figure? 17,500, the fair value of the asset. Number 2, on the same day, we're going to debit obligations under finance lease account. And credit cash with 460. 1 year later, 31st December. I presume 31st December is the year end. 31st December, we'll do the easy one. Debit depreciation for the year and credit accumulated depreciation. How much? The shorter of the lease term or the useful life, I'm hoping that this asset is going to last at least 7 years. Otherwise, if it's only a 5-year life, I shall find in the last 2 years that I'm still having to pay finance lease charges and installments on an asset which is no longer working. So I'm hoping it's got a 7-year life. It's a 7-year contract, so if we can presume that estimated useful life is at least 7 years, what's my annual depreciation charge? 2,500. And also on the 31st of December, I'm going to pay 3,500 installment. Where's the debit? Yeah, but how much? Only the capital element. The remainder is going to go to finance lease interest. And there's our problem. Okay. This is not likely to come, I don't know. I was going to say it's not likely to come as a 15 or a 10 marker. It certainly won't come as a 25 marker, but it could very well come in question 2. Could very well come in question, or question 1, consolidation. Question 2, preparation and presentation of accounts. This could very well be an element. If you reach this point and you think, I can't do lease calculations, then put in any figure you want for the finance lease interest. We know the total finance lease interest is 7,460. You know it's a 7-year lease. So put in a figure, 7,460 divided by 7. 1,065. Just apply the level spread method. You've lost a mark. But you've not wasted time doing something that you're not happy about doing, that you're not certain about doing. So put in a figure. It's only 1. You've still got another 99. You can still win the global prize. But we can actually work it out, and we really ought to work it out. And this is the way you would do it. The fair value of the asset is 17,005. And immediately, we pay a deposit of 460. So we're actually borrowing 17,040. And we borrowed that for a year. The interest rate is 10%. Which is 1,704. And before we make this first 3,500 installment payment, we therefore owe 18,744. Beware, it is an easy mistake to deduct that 1,704 rather than add it. Just be careful. I remember when I was a student, 2 or 3 times I deducted it when I was doing this calculation. And it's a pain, because when I was doing the exams, you didn't have calculators. So you do all the calculation, you add it all up, and then think, oh, I deducted it instead of adding it. Now we pay, on the 31st December 04, we pay 3,500, which means that after the payment is made, I owe 15,244. How much interest is in that first installment? 1704. That's the finance charge for the income statement for 2004. And here is 15244. That's the obligation at the end of the year. Okay, I've shown you the first year. Just continue it down into the next year. Just work out for me what is the interest for 2005, and therefore what's the obligation at the end of 2005. I don't believe I'm hearing calculators being used. Okay. The obligation at the end of 2005 is 13268. 1524 is the interest for the second year. You see, it's different, obviously, than 1704 for the first year. Now down at 1524, and as each year goes by, the interest element of each installment will reduce. The capital element will increase. Okay, I think we established earlier, in the middle of the screen there, that 15244 was the obligation at the end of 04. And I've just worked out that the obligation at the end of 05 is 13268. How much of 15244 is current liability? And how much is long-term liability? You don't need a calculator. You really do not need your calculator. Look, 15244 is the obligation at the end of 2004, and this 13268 is the obligation at the end of 2005. How much of that 15 is long term? $13,268 is the long-term liability. And if that's the total liability, then the difference is current. Now you can either look at that difference, or you can say it's 3005 minus 1524, 1976. You will probably not need any more than that. If this came up in an exam, you will probably not need to go more than 2 years. He has asked in the past, but it's a long time ago, he has asked in the past for you to calculate how much interest is included in each of the 7 years, which is just a calculation exercise. It's just batting away on your calculator. This question actually does. It says calculate the interest charge for each year. You will not have to do this probably in the exam. Just do it this once. Just do it this once. Calculate how much interest is included in each of the remaining 5 installments. Just do it once. I'm not going to ask you again. there was before I tell you, all right. You're all doing it. It's simple enough, isn't it? It's a simple exercise. Add on 10%, take off 3,500. And you get down to the bottom there, and it says that we still owe 2. We still owe 2. And there was an F7 session on www Open Tuition last week. You've heard of www Open Tuition? Yeah? Okay. There's a question asked in the F7 session. The tutor was online, and it was an hour's session. And the question came up, I'm having a problem with finance leases. I've got a balance left of $1.26. What do I do with it? I was reading this. I thought, $1.20, that's very good to get so close. And we were talking about a $24,000 asset. And at the end of 6 years installments, she's got a $1.26 difference. What should I do with it? I'm really stuck on this. And I'm thinking, how can you be so stuck on something which is totally immaterial? What am I going to do with that too? I'll probably pay 3,502, or I'll probably pay 3,500 and let the lessor take me to court for his $2. He's not going to do it. Nobody's bothered about $2 in 17,000. So it's rounding. One of you has actually written due to rounding differences. I wouldn't even do that. I wouldn't even put due to rounding differences. You will not be asked to do this exercise. The reason I have done it, the reason I've got you to do it, is because if you read the examiner's comments, F7 examiner's comments, or it might be P7. No, I think it was F7. It might have been the advanced auditing. But the examiner has said many students gave long tables of detailed calculations which were totally unnecessary. Once you've got past year 2, there's no need to do the calculations any further. All you're doing year 2 for is to determine how much of the obligation is current and how much is long term. There's no need to go into 3, 4, 5, 6, 7, 8. There's no need for it. Probably. He's not going to ask you this. It's an exercise on calculators, that's all, and it's not worth asking. He's not testing you on anything. Okay. I tell you what you could do. You could show me the gross and net presentation for the installments. At the end of year 1, at 31st December 2004, do the note which reconciles minimum lease payments with fair value. I tell you what, I'll do it for you. We're at 31st December 2004. And within 1 year, we have 1 installment. And years 2 to 5, we've got 4 installments. And more than 5, we've got 1 more installment. So we have minimum lease payments of 21,000. Deducted from this is interest not yet accrued. What is the present value of the minimum lease payments outstanding at 31st December 2004? Is that 4? No, it's that one, isn't it? 15,244. Is it 15,244? Yeah, 15,244. 15,244 is the present value. It's the balance on the obligation account. It's the capital element outstanding. So 15,244 can go in there, which means interest not yet accrued must be 5,756. Do you want to do the net presentation? Do you want to do the net presentation? This is a straightforward question. Do you want to do the net presentation? Yes, you do. Well, do it then. If you'd said no, I would have done it. But if you want to do it, then you do it. Do you want me to do the net presentation? All right, I'll do the net presentation. What's the present value of 3,500 payable in 12 months? Well, if you look at the table that you've just done, you'll see that 3,500 with 1 year to go actually has a present value of 318. So 3184 is the present value of 3,500 discounted at 10%. So 3184 can go in there. And using the same logic, if we go back into the table, we can find that 3,500 payable in 6 years' time has a present value of 1,976. The difference between the interest and that. So if I put 1,976, if you don't believe me, put 3,500 into your calculators and divide by 1.1 6 times. Is it right? Is it 1976? Did you check it? Yeah? Good. And therefore, by default, the missing figure, the middle figure, must be 10,084. But you're not going to get that, maybe.